Good evening, traders. This is Daud from Elliottwave-forecast.com. I hope all of you are doing great. Welcome to video of the day. In today's video, we're going to take a look at the pound New Zealand pair. We will take a look at the 1 hour chart of pound New Zealand or pound Kiwi, which we think is doing a WXY structure up from this low here, the one that we saw around 9th of January at the 192.38 area. Okay, so it's a WXY Elliott wave structure. It's a double correction. Many call it a double zigzag. Okay, which is not the case, because not every double correction is a double zigzag. For it to be a double zigzag, this leg here needs to be in 5 waves. This one has to be 5 waves. This one and this one also in 5 waves, and then it could be called a double zigzag. But majority of the times that's not the case, so we prefer to call it a WXY or a double corrective structure. That's the right way to approach it, because otherwise it can create confusion if you call it a double zigzag, because then you would be thinking that all the internal waves are in 5 waves. Okay, which is not the case here in this structure. So this is a WXY structure or a double corrective structure here, but not a double zigzag. So it basically runs like this. You have a blue WX to complete the W in double parentheses, a pullback in the X in double parentheses, and then you can either have like a 5, 6, and 7 swings here. But in this particular case, the chart that we're looking at, we believe the Y leg at this part here. All right, we believe it is a flat. This portion here. Okay, we think this is a flat, which itself is a 3-3-5 structure. So you can see 3 waves up here to complete the A leg, which is this A over here. 3 waves down to complete B, which is this B here. And then we are looking at 5 waves coming up from the B low. And of course, we are in need of one more high to complete 5 waves up from the low here, which should complete 3-3-5 structure from this low. All right, which is this low over here, and of course complete a WXY structure from this low, which is this one over here. And that's the idea. That's what we're looking at here in this pair. And now quickly let's take a look at some extensions here and the relationship between the waves in this structure. So if we check out the relationship between the W and the Y here, going into the black W, you're going to see that they were equal to each other. All right, 100% extension. And then we see the relationship between wave A and C of X also equal to each other. All right, 100% extension there. And then of course this is a flat in the Y leg, 3-3-5 structure, in which we need one more high to complete wave C of Y. Okay, and that should then complete 7 swings, 7 big swings up from this low. 1, 2, 3, 4, 5, 6, 7. Or a WXY structure from here as shown in this graphic, right? So that's the idea. Now of course it could play out like it doesn't have to be a flat here in the Y leg. If the RSI divergence is erased in the next push up, okay, as far as it provides us with the divergence, then we would continue to call it a flat in the Y, as in an ABC structure here. Okay, if the RSI divergence is erased, all right, that means it could be a WX, Y, X, and Z structure as well, and it does not have to be a flat in the Y. I mean, that's not the only way it can play out. It could be a W, X, Y, X, Z as well. But as you can see that there is no green arrows on the charts, and so of course we're not looking to buy the pair. There is a red arrow here. There is an invalidation level, which is the 1.618 extension of this W related to X. This W related to X here, it's a 1.618 extension of these two swings and this connector. And as far as price stays below the 1.618 extension, we are expecting a failure in this area, and then the pair to turn lower for new lows below here, or at least give us a 3-wave reaction lower from that box, just like it did over here when it reached this W, because that was interestingly the equal legs to the 123.6 extension area of the blue WX. This area here, just like we had a box here, we believe we're going to get a similar, this is a similar box, all right, to this one. Okay, this was the equal legs 1.236 extension area of this swing related to this one, and then the box that you see here on the chart over here is the equal legs 1.236 extension area of this swing related to this X wave low as the connector. All right, so just like we got a reaction from this area here, pair tried to resume the decline, it could not. It still did make a three-way pullback to allow those who shorted here to go into risk-free position. So similarly, we are expecting a reaction from this box as well, which is the next equal legs area now of this higher degree W and X, and we're expecting the decline to resume to new lows from there, or at least a three-way reaction low. Remember, market moves in the sequence of 3, 7, and 11 swings. It could not resume the trend after 3 swings. Let's see if it can do it after 7. Okay, but even if it does not, as per the Elliott wave hedging idea, we are expecting to see at least a three-way reaction lower from here, because in this area both buyers and sellers are going to agree in the direction of the next move, which is three ways lower at least, okay, if nothing more than that. But primary view is to look for new lows below here. As far as the pivot at the December 9 high, 2.0540 remains intact in our system. That's a key pivot in our system, which you cannot see on this chart, but that's the pivot there, and this view for new lows would remain valid as far as this pivot is holding in our system. And price wise, of course, we do not want to see price getting above the 1.618 extension of this WX, which comes at 2.0192. So as far as you stay above there, and anybody trading this structure, that is strictly the invalidation level. We do not recommend basically using an invalidation level higher than that, because if price exceeds this level here, then it could turn into a more extended move to the upside. So that's strictly the invalidation level, and as far as price stays above there, we expect to see a failure in this area, sellers appearing here to take prices to new lows below here, or at least give a three-way reaction lower as per Elliott wave hedging, in which both buyers and sellers will agree in the direction of the next move. So the reaction from here, at least, just like we got a reaction from this box, all right, at the equal legs of blue WX. So that's the minimum expectation from here, and ideally new lows below here. As far as price stays below the 1.618 extension, and the pivot at the December 9 peak at 2.0540 keeps on holding in our system. I hope you enjoyed the video. For further updates and to get to see our view in this pair on the higher time frames as well, we invite you to come and take a look at the different membership plans at our website www.elliottwave-forecast.com. Of course, you can sign up for a 14-day trial as well and check out the new instruments that we have added in the Elliott Wave Plus plan. Thank you all.